GKFX Prime presents the Market Analysis Webinar.
Hi everyone, welcome to another weekly webinar. So some big moves happening in markets. We're having the Nikkei push into the 30,000 level for the first time in 30 years. We've got WTI crude oil pushing into $60. So some big moves happening. The pound doing well too, pushing higher. Looks like some dollar weakness coming in from last week. US indices up at record highs. Some stuff going on. Let's have a look at it now. I'll start with the Forex. I'll move through to commodities, indices, and then a bit of crypto at the end. Any other charts or comments or questions you have, please drop a comment in the video, and otherwise just click that like button. That really helps us out a lot. Okay, so start with the euro. Bigger picture here is that we're in an uptrend on the daily chart. We had some resistance where we'd paused for a few weeks. We rallied up, broke through it. We've come back and tested it, and a strong rally off the retest of the resistance. The resistance became support. So this is all suggestive of a correction and a continuation of the longer term uptrend. So shorter term, we've got our 4-hour chart here, and we can see that this is that correction we were talking about. And here's the strong rally off the low we were talking about. We took out this declining trend line, and we've pulled back to just below the 121 level. We've rallied up from there. It looks to me like we're going to take out these highs and rally up to the the next resistance, which is this old peak here. And when we actually do take out that peak, that would be the kind of confirmation that we need. Just looking at this daily chart of actually taking out and making a higher high. So that would be helpful, and then 122 is just above it, and 123 is basically up where we stalled out last time around. So it's certainly possible that we have a deeper correction, and if we did, 120.50 looks pretty logical. It's the round number. It's also this previous low down here. So if we can't get through these old highs and we drop, that could be an opportunity down there. But otherwise, for me at the moment, we've had a big rally up. It doesn't necessarily need to come back much lower, but definitely watch out for 120.50 as an opportunity. Here, it's not, you can trade the breakout from these levels, but just sitting underneath the resistance, not a great opportunity to buy. Arguably a place to sell, just on the hopes that we get down to that 2050 level, but it really would be more on a hope. And it wouldn't be in line with the kind of broader structure that we're looking at, which is a continuation of this uptrend. Moving swiftly on to the British pound, and here you can see that strong breakout hit the 139 level. So you can see we were in this kind of rising horizontal channel, but the speed of the channel, you can see the fact that we basically haven't touched the bottom of this channel, and then we've been grinding into the top of it, and finally we broke out the top, retested, rallied up, and you'd expect naturally, as I've said, I think I've said this the last couple of weeks, that 140 looks like it's on the cards. For the time being, this is the H4 chart. That old high. If we can get a bit of a kind of rally up from there, 139, retest of the old high somewhere into here, and then a rally up at possibly 140 this week, who knows. But it's definitely a bullish looking chart, not much else to say about it. Pull back to 138 again would be obviously a lower price to be able to buy into. It would have the rising trend line and the round number support, but we've basically already done that. So you wouldn't necessarily expect, after a successful test once, you certainly could get it again, but I wouldn't bank on it. It's a rising trend. Somewhere into this old high would be where I'd be expecting any pullback to finish off. Maybe it could be through there somehow, but it's 138.50 is obviously in the middle somewhere, so look to that old high, 138.50. Dollar yen. Okay, so if we remind ourselves, we broke our declining trend line at last, and I said that was, once we'd broken through it, I said that was looking good. We rallied up, touched the old high here, and we basically just had a pretty sizable pullback from that old high. But I suggested a pullback was on the cards last week, and I didn't necessarily think it was going to go all the way back down here, but I certainly said it could drop down to the previous declining trend line. It would be all the way down here or down towards 103.50 again, but we held on to 104.50, which actually in terms of kind of textbook technical analysis, it was pretty much on it, because we just pulled back, tested the old high, and we've rallied up again from there. And so even though this looks like a sharp decline and something to excuse me, something to be a bit concerned about, I think in the broader structure here it's actually fine. It was a sell-off from the old high, as we showed there on that daily chart. It's a sell-off from here. It's a big level, 105.50. Big drop down, 100 pips, but I think we're done. And so we've taken out, we made one high, took it out, and at the moment we're in the process of trying to make a new low, and you could pretty much say that we've done it. One, you kind of want two on either side, so we're in the process of forming this candle here. Maybe we fail and turn lower, but it looks like actually we've pretty much done our test of this high, and we're pushing up to the upside, and naturally you assume a test of the old highs if that is the case. So the dollar yen looks like a positive market. It's testing resistance, just like we were saying with the euro. Interestingly, these currencies kind of trading in sync at the moment. But yeah, you don't necessarily want to be buying at the high, but the structure is suggesting higher highs and higher lows at the moment after that retest. Moving on to the oil market, yeah, so I mentioned that WTI has broken through the 60 level as of the start of the week. Now this is our weekly chart, just to show how massive this oil rally has been. I've said over the last couple of weeks that this oil market is looking pretty overdone. It's looking overstretched, but there's no reason it can't keep going, and that very much continues to be the case. It's it's definitely an overstretched market, but as far as resistance, there isn't really much. We've crossed 60, but 60 wasn't necessarily a big deal. It was 65 and 50 that was the range that we dealt with before the pandemic, and so we're basically we crossed back through into the range. When you see we had a bit of a kind of consolidation in the market down here after having breached the range, and now it looks like the market's trying to push back up to the top of the range again. So it looks like a move towards 65 is on the cards, but as I say, some big pullbacks could happen first, and you'd look towards 55 as just a round number, and it's just above that last consolidation we had. So that could be a possibility. I wouldn't necessarily, if the market does drop to 55, you'd obviously start questioning whether we've actually put in a top after this big rally. But I think we've got to try and keep our mindset that we have now when the price is at its highs, thinking that we're still in an uptrend, and actually when it's dropped a bit during the uptrend, that's the best time. So not much to be done at the moment in my view. We've already broken out big time, taken out this previous high. Wait for a dip to the old high, if not down to the lows, which is around 57, and if we take out there, it just means this short-term strength is lost, but the bigger picture is still very bullish, and 55 could be interesting. So moving on to precious metals, gold, one of the hardest markets to trade at the moment. I'm not really touching it. I think it's a good rule of thumb with trading. If you don't really understand the structure of the market, it doesn't fit with your trading style, just don't touch it. That's one of the best trades you can make. It's just not trading when the market doesn't make sense to you. That said, I'll do my best with it. As best as I can see, we're in a longer term bullish trend, as we all know. We've gone through a prolonged we're going through a prolonged correction, and we've basically put in, we've got kind of a solid low in here about literally at current levels that we're testing around at the moment, around 1820, with 1800 being the big number to look out for, and so in terms of the short-term price action, 1820 has been kind of holding us up. We had a drop through there, we rallied up, but we stayed within this channel. We dropped again, or we kind of held on to it. I think if 1820 gets taken out, we'll probably get dropping back through 1800, and then we've got a test of the old low on our hands. And remember, I mentioned last week, I believe, that a death cross looks imminent in gold, and that doesn't mean dramatically lower prices, but it could mean a dip down through to maybe even 1700 or so, down to these old highs down here. So that would mean from having been up at 2050, we come down to 1700. That would be a 350 point correction, and so that would be that would be a sizable correction, and maybe at that point bulls can resume the picture. But at the moment, some attempts to hold the 1820 level, but it's sort of choppy, not quite working. We're still within this choppy downtrend. We haven't exploded to the downside, but we haven't found enough support to trigger the next leg higher in this kind of longer term bull trend. So as I say, in the short term kind of swing trading type environment, it's choppy trading. Might be better on the shorter time frames, typically not something I touch with these webinars. Now I've added silver to the list just because there's been a lot of interest around silver recently, even though it also has been kind of a tricky market to trade. So basically we had a test of those multi-year highs after the big Reddit ramp up, the attempted short squeeze. I think that maybe has just proven to be a bit of a distraction to actually what looks like quite a reasonably bullish structure, actually a bit more bullish so than gold, which you could just kind of been printing lower lows. Really, silver's held quite solidly in this range, and it's just been kind of going sideways. And so maybe silver continues to kind of go sideways in this range, still maintaining kind of bullish longer term picture, while gold corrects lower. That's entirely possible. These metals do sort of generally trade in sync, but not necessarily perfectly. And what I'm seeing here is that we've held the low, we've made kind of higher highs, and then if you drop down to say this 4-hour chart, it's also higher highs. So we had the massive Reddit rally, made higher highs, tested that old previous cycle high, came crashing down when the short squeeze unwounded, but we just actually ended up just testing the old high. So if we'd maybe had a bit more of a kind of reasonable market action where we took out the high and then tested it, we wouldn't be as so worried. This was basically just kind of a bit of market excess, I would say, that maybe just kind of unexpectedly came in the market. If you'd assumed that hadn't taken place, maybe we'd have just tested this high, then pulled back, then we'd be up. And so you can see that basically we came back, tested the previous high, we've made a higher low at that old high, and then again we've made a higher low up here. And on the shorter term basis, we've taken out this little short term trend line, and we're pushing up into the old high, having made that high low. So to me, it looks like we're actually about to take out these highs again, and maybe gradually make our way back up tentatively to that big 30 level. Moving on to the S&P 500, let's quickly remind ourselves where we are. We held on to the 3650 area, 3660 I think it was, very well after that kind of more dramatic test. You remember I said that, for a correction we took out one low, but you need to take out the next low to really start getting bearish, and we came nothing close. We just rallied straight back up to the high again. We've not even come back to test those highs. So if you see the price coming back to these highs here through 3870, I think that could be an opportunity, because so far we've just been consolidating in a very tight range up above there. So if we come back to there, that could be the test we need to take off, but it looks like we don't even really need it. You can see that with there's a few attempts to kind of sell us off through this consolidation that didn't work, and then we've taken out the high, and as I say, we're up at record highs. 39.50. So obviously not far away from the big 4,000 level for the first time in the S&P 500. Again, could be a milestone that happens this week. Last but not least, a good old Bitcoin. We obviously had that massive rally last week owing to the move from Tesla to add Bitcoin to their balance sheet, and a few other institutions, MasterCard, etc., BNY Mellon, a bank in New York, talking about adding Bitcoin in terms of its custodial service. There's a lot of good fundamental stories going on for crypto at the moment. Just the general mainstream adoption idea of it really picking up steam. And so we're just shy of the 50,000 level. So almost the only bearish case you can make for Bitcoin at the moment is that it's gone up so far, and we're just about to hit a big round number, which is the kind of level that traders at least would look to take profits. So you've got some long-term holders of Bitcoin that probably aren't going to try and take profits here. They believe in the long-term story. But if you're talking about traders like us, then 50,000 is that kind of big level where you can already see from this chart pattern that basically came up close to 50,000. So profit taking, ran up again to the old high, profit taking. We've been pushing up because it's been such a bullish market. There have been new buyers coming in on these dips. So you've got longer term holders taking profits, buyers buying the dip, more profit taking, buying the dip. And it looks like the dip buyers are winning out, and I suspect we hit that 50,000 level. But I do wonder how far we can get beyond it until some really heavy money comes in and puts the market back down again. This is a very short-term chart. This is just the 1 hour chart. You can see here's where we took out 40k or whatever it was, 41k and change before. We had that last week, big rally, and we've just kind of consolidated into the highs. But arguably a rising wedge pattern is bearish. If we do see a breakout lower, I would maybe just look to that high here. It's a bullish market. You don't really want to be selling it. You could go for just a bit of a hit and hope at 50,000 that, as I say, the profit taker is going to come in, but more the way to use that information, in my view, is just to kind of lighten up on the buying as you go into 50,000 rather than really looking to sell, which you just don't normally, as a rule of thumb. But maybe some of you know from trying to do it before, you don't really want to be selling Bitcoin. It's just such a strong rising market until we've got a lot more evidence that it tops in. But if we do get a decline, look out to these. This is the next level down here at 38,700 was these two lows here, or as I say, this previous record high up at basically 42,000 would be two levels to look to if we get a snap down through this rising trend line. Right, that's it for this week. Good luck trading. Thanks for watching, everyone. Make sure to subscribe to the channel so you don't miss the video next week.